looking out from my window, they were always safe, although we are facing the Burj here. So what we did as a precaution, and the only precaution we've taken, is we were on the 28th floor, which was the top floor, and we have chosen a room on a lower floor now. I mean, we moved down yesterday to like 10, 12 floors lower just for whatever psychological reason. But otherwise, obviously, there's no crowds anywhere, but we went to the mall, we had lunch there, dinner there, little bit of shopping from few places here and there. But broadly, there are very few people, obviously, only, even otherwise, Ramadan, so the crowds in the daytime are less. But you can see some smoke here and there, but that is not on us all the time. So that way, it's all okay.
Okay, all right, Samir. Good to hear that you're safe and you're sounding upbeat even in these tricky times. So that's good news personally. What about financial markets, Samir? Easier said than done. History suggests that these are buying opportunities, but the sound bites that we're getting from, overnight weren't very, very comfortable. Mr. Trump talking about it could go on for a few weeks. The Iran forces, they are talking about independence and acting on their own terms. It's going to be a bit of a tricky phase. How do you approach the markets?
It might be a tricky. It might be a tricky phase, but let's say it takes 2 weeks or 1.5 weeks, and therefore that way uncertainty is longer. But we broadly know from every other war or battle we have seen in recent years, or maybe even in the longer term, that in the next 30, 50 days, you will completely reverse the script and say, now this has settled and the US friendly thing has come and oil has come back. So therefore, once you broadly know, let us say, imagine what will happen, say 35 days later, 40 days later, 20 days later. So if you think that for the first 5-7 days, you will sell it, and then the 9th day you will buy it, I think that doesn't work. I have tried it. It's not that I don't try it. I'm a hedge fund manager. And more than that, even when I was in Alliance, I was a very aggressive equity manager. These things don't work. If you had done it last week, thinking that this war will happen, then today you might save 0.5% or 2% here or there, but it does not work. So therefore, don't think that not short term. By the way, I don't claim that I am some 10-year horizon guy. I also do day to day, but it does not work. So therefore, I have become more relaxed over the last many years.
Right. Okay. So, in terms of sectors, typically what we've seen over the last few years and a few conflicts that took place, the defense pack was one that really stood to the fore. Right now, we've seen some recovery from the lows, though they're still well off their highs. Do you think this is a space that one can look at once again, or no?
Yes, I think we were already looking at it even before this, because basically it was clear, at least this talk about this war had been going on for so long. And in general, every country is now trying to be a little bit more self-dependent. And India anyway has officially announced that they will support local this thing. But the problem in defense sector is that these big companies that we have, which are these PSUs, their projects are so long-term that if somebody's saying, I am going to make submarines for the government or for Navy, or I'm going to make aeroplanes and, this will fighter planes or aeroplanes, and these will take 10 and 15 years, we are not able to analyze them, because after you announce a big order, it might take 3 years while the design is still going on, and 2 years where the design will become a prototype, and then somebody will approve it. And so you don't see anything for 4-5 years, and then you get frustrated. Therefore, if you see in our portfolios and even our domestic guys, we basically like only one company, Bharat Electronics, because it does what we call day-to-day work. You don't need these very massive orders. You don't need orders which have 20-year execution cycle and all that. So basically in the end, there are very few small caps here and there, but otherwise you can keep calling it a good sector, but there are no stocks.
Samir, hi, morning. Your own gut, do you think this conflict will be short-lived? Because business hubs, financial nerve centers like Dubai have also been impacted in a way. So do you expect the region to put pressure? And plus, we've got the midterm elections for the US, and Trump likes to take credit for the fact that how under his regime we've seen crude prices, gasoline prices come down. So it's not in his interest that prices go up. So in that context, do you expect this to be fairly short-lived?
I was thinking any day it can stop. My logic is as follows, that normally in any of these fights, wars, whatever, you start by killing many soldiers and then you try and reach the top guys or the top guy, and it takes months or weeks to do that because he's hiding until you get him. You can't say that that you've defeated the enemy. Here they have started by killing some 30, 40, 50 of the top guys. So now the 51st guy in sequence is maybe a key decision maker or a key leader, and he knows that the top 50 were killed in 1 day or 2 days. Therefore, that pressure on them to deal, and actually President Trump is already saying that they have, actually I just saw just before this on Wall Street Journal that I don't know, you can read, some senior guy has already approached the US saying, let us talk again. It is logical now for them to talk, because you imagine if the supreme leader and his heir, his daughter and her husband, and then some leader of the, whatever they call them, Revolutionary Guard and whatever else they have in their structure, all of them are killed. So you don't expect the 51st guy to be able to take the same strong decisions which the first guy, having, sort of started this and being in power for so many years. So it is possible that it stops very quickly, or it has a pause, maybe after 2, 3, 4 days, 2 days, or any day for further discussions, and then that is enough. So I don't think this can be a very long war. Also imagine separately that Iran has had sanctions on them for so many years. How many missiles, how many missile launchers? I think it was on CNN, I saw they have some 8, 10 missile launchers, and I'm guessing that when they launch something, then the Americans, Israelis know where it's being launched from, and they try and hit it, so it can't last too long. And the effects of this, in that sense, the rest of the region has had drones and this and that, so it's not going to have an long-lasting impact if it does get resolved. And you're right that President Trump is already saying that I'm willing to pause it because it might be easier to deal with the now guys in control or whatever, or in power in Iran.
But that's amazing. So you're not too concerned with regard to what we have right now on the geopolitical front. I'll tell you what, Samir, it's actually a blessing that tomorrow we are closed. It gives that one more day of bargaining time, right? One more day passage, totally. And hopefully we come back on Wednesday morning and things are a little bit more eased out than what it is right now. I think that's a blessing.
I was saying exactly the same thing yesterday, that Tuesday is such a perfect day to have a pause for us. Perfect. Yes.
Right, and it'll be a happy Holi as well if we hear some kind of easing out and some cooling off for humanity on the whole. That said, Samir...
Ideally, we should have a 2-day holiday, because we don't have to say it's because of war, but it's because of 100% confusion on Diwali.
On Holi.
Whether it's Tuesday or Wednesday, you have declared Tuesday, but now they say it's on Wednesday. We should have 2-day holiday. Then you can be even more.
We are pushing our luck, Samir, but it's okay. I mean, that one day will actually be a blessing in disguise. You mentioned about BEL, and it looks like you'll be having your shopping basket ready as well. Give us a couple of other ideas where you'll be looking at. The market should open under pressure. Going by the cues that we have, so and there'll be some margin calls as well that'll get triggered. So what else will you be looking to buy?
Just to tell you, because these things don't impact my market. What I say with my flows. So by chance, we have a very big inflow, not in our Indian fund, but in our offshore fund of maybe near 500 crores. And as of now, it doesn't matter, but we plan to invest it today.
Okay, you plan to invest that money today. That's a big word coming in from you. Samir, just before
maybe afternoon or maybe after 2-3 hours, let's see. But broadly, at least 90% of that we are going to do it, because I really think that even if it takes 5 more days, it's not going to take months, and it's not putting us in a spiral down for us or anybody else. And separately, India had started doing well relatively, in the sense that even with that very massive IT correction in Feb, which was whatever, 18-19%, the market was generally strong. The FI flows were strong. The currency, strong means it was up, not strong. It was up. And the currency was up, and flows were not negative from FIIs. So
just before we let you go, the auto sales numbers that came by yesterday, most of them were above expectations. You have some money to deploy. Would you deploy it in auto names? And you've been a proponent of some of the new age companies as well. Eternal is off its highs. Ola, you're obviously out of it, but given the sort of decline that we've seen in the stock, would you be tempted once again? Or maybe you're out of it for
So
good?
that one, we got out around minus 10% of our cost, which is part and parcel of risk business. So we bought it on 44 and we sold it around 39 to 40. No, we will not buy that. But others, we will buy mostly what we have. But, these auto sales and all, I am right now in Dubai. So I broadly saw for, I think, Hero and all. But generally, I have not seen all this. We still have to do our calls internally, but we are not doing it right. We are not investing on opening. So we thought we have 2-3 hours before we do it, but we will do it today. As of now, that is the plan.
And Eternal?
We'll see. But Eternal, we have enough, but we will add. If not today, we will add because we think that one is not affected by all these things also, and it is not affected by AI. And I am very delighted that today Nigel is not telling me how the IT sector has performed and why I have not bought it back. And it is my strong this thing that I did not get under pressure from him. Otherwise, any normal young fellow would have come under pressure that every time I come on CNBC, Nigel says IT index is up 22% from the last time we spoke. You don't seem to have bought it.
No, but you're not. But you're not interested in tech, right? I mean, you believe there's still a tricky phase, right?
No, it is much more tricky than this war. Obviously.
Okay, all right. Samir, no, Nigel's not putting pressure on anyone, Samir. Nigel is happy to commentate and happy to speak to people like you all. And please stay safe, Samir. We enjoy the commentary and a little bit worried to hear that you were in Dubai, but you're telling us things are better.
Yeah, okay. Thank you very much.
All right, Samir. You have a good day ahead and stay safe. Well, time to slip into a short break. On the other side, we have the management of MTAR Tech who will be joining in to talk about the data center opportunity as well as the escalating tensions in West Asia. Don't go anywhere.
Welcome back. Let's invite the management of MTAR Technology. This is a key precision engineering player in India's defense ecosystems. They manufacture core assemblies for the Agni Prithvi series. They produce control module components for LCA Tejas. They've been a partner to DRDO, and they recently, I believe, also formed a strategic tie-up with Adani Defence to build for the ACMA contract. Srinivas Reddy, MD of MTAR Tech, is now joining in. Thank you very much, sir, for joining in. Difficult times, especially for those in the Middle East. Now, I know that you are a diversified player, but if we could begin this conversation by understanding what is the contribution from defence to you? And increasingly, say in the last 6 months, 1 year, what has been the growth in defence and what is the pipeline going ahead? Do you expect the revenue contribution to further increase?
No, our defense portfolio, we work on various projects, but our defense portfolio is much lesser compared to the other verticals that we are working right now. And some of the different contracts are pretty long-term contracts. Obviously, we are being very selective and in terms of what we need to take and what we shouldn't be taking, unless it makes a lot of national importance for the country to take up a given project. Other than that, right now, nothing much has changed from the last 6 months, I would say.
Okay. So what is the contribution and why are you being selective?
No, selective in the terms of, as we all know that certain defense projects are very long term. So in certain projects, there's a lot of R&D work involved. So we are looking at a situation where taking up a given project and if it is commercially viable as well in the long term. So there are a lot of other aspects of it, we look at it. And some based on the national importance that we give priority. So it all depends on that. So.
Right. If you could give us a sense on the proportion of your revenue that comes in from defense right now. At the same time, how much of that is domestic? How much of that is exports? Have inquiries increased from the export side?
To a certain extent, yes. But our defense portfolio is probably, I mean, the portion of defense in our business segments is less than 5% right now.
It's less than 5%, so a lot smaller. All right.
All right. Hi, sir. Good morning. Let's focus on the data center opportunity then. Bloom Energy, they have emerged as the leading provider of SOFC technology for data center power. Now, Motilal Oswal, they come out with the note. They say for every 1 gigawatt of orders that Bloom secures, MTAR stands to receive business of approximately, I think, 900 to around 1100 crores of order inflows. Is that a fair estimate?
I mean, I cannot comment on the numbers, but what I can say is that we have been working with the customer for many years right now. So we can see a lot of demand or requirements coming in. And we're also expanding based on the requirements of the customer.
Sir, we just wanted to understand with regard to a metric. Sir, if we had to put a metric in for Bloom securing 1 gigawatt of orders, that could potentially mean, you'll be doing some part of that business. So that could mean an order inflow of around 900 crores for your company. Do those estimates seem more or less in line? We're not asking for an exact number, but that could be ballpark 900 to around 1100 crores of order inflows?
Yeah, something like that, but we are not supposed to discuss on the numbers because we have signed the confidentiality. We can't deep dive into it, but more or less close to that, yeah.
Oh, interesting. And I'll tell you why, Mangalam, before you go to the next question, because Bloom is estimated to get 3 to 5 gigawatt in the next few years. And if we go by that matrix of around 900 crores approximately, Motilal Oswal is saying that roughly around 2,700 to 3,500 crores could come in from this data center opportunity for MTAR. Yeah.
Right. So basically, I just wanted to follow on that itself. Beyond Bloom, are there any other clients that you're looking at for the data center as an opportunity? And as a result of which the actual performance could be a lot more than what the street is anticipating, because largely it's working on numbers coming in from Bloom.
It's not about one given customer. We are looking at various customers at this point of time, and a lot of inquiries have started coming in because of our capabilities. So the team is working on that. So as and when it gets through, then we'll be able to let you know.
Oh, okay, sir. This year, it appears you're going to be ending with a number of close to 750 to 800 crores. But since the quarter is ongoing, we're not going to push you at that. But given the kind of order inflows, given the kind of execution that you're looking at, the same note that Motilal Oswal put out, they are working with 1,860 crores of revenues by FY28, with margins in the early 20s, 450 crores of EBITDA. You think these numbers are gettable? That's in the next 3 years?
We have to see. I can't comment on what Motilal has mentioned, but we are actually moving in the right direction, and the numbers are obviously achievable based on what we can see and what's happening there.
So approximately a 40% revenue CAGR is what they are estimating. Seems fair, right?
Yeah, it seems fair. Yes.
With margins improving by around 400 basis points to around 23-24%. Fair?
Yeah, that's right.
Got it.
Right. What about order inflows? So far this year, what's the number that you've had, and what are you anticipating in terms of order wins for the next couple of years annually?
I mean, I've mentioned that we'll close the year with 2,800 crores plus minus a few percentage points, depending on certain tenders. That's the closing order book for this year. But moving forward, obviously we'll have, I can't just quantify right now, but a lot of orders are on the pipeline, and the way the demand for various verticals that we are in. So we'll have a pretty strong order book moving forward as well.
Right. Just to quantify that, I mean, this year you were anticipating about 1,500 crore worth order wins. Obviously, the first 9 months you've done closer to 1,400 crores, so that looks pretty achievable. Do you think the next couple of years the order wins would be in a quantum similar to what we've seen in this financial year, or would it be significantly higher?
No, similar to this or significantly higher. It depends on how the various projects are moving and all that. It's too premature to comment on that, but we'll have a very strong order book.
All right, and final question before we let you go, sir. If you could give us a sense on all the things that you're doing to reduce the working capital cycle, because it was over 200 days, you have a target of taking it closer to 140. By when does that happen, and what are your plans to do so?
I think we said we'll try to bring it down next year below 200. That's what we're trying to look at. But the team is working on various issues in terms of reducing the number of working capital days, trying to reduce the credit terms to the customers. Various things they're doing to do that. And we're pretty confident that we can bring it down below 200 days.
All right, take that point. Confident that you can bring it down below 200, and the FY28 long-standing target is 180, and beyond that would be closer to 150, 140. We'll monitor that as we go. The last 3 months have been fairly good from a stock return standpoint. Let's see whether the fundamentals are, as well as some of the analysts' expectations on the street. We take a short break, come back on the other side. We have the pre-opening, and also with us will be Prabal Sen of ICICI Securities to talk about the impact of West Asia tension on the oil and gas sector. We'll also connect with Sudarshan Sikhani and Mitesh Thakkar for technical trades. We're back 15 minutes away from market open. Perfect to get in some technical trades. You're watching us here on Bazaar Open Exchange from CNBC TV 18 Motilal Oswal studio. We do have with us Sudarshan Sukhani as well as Mitesh Thakkar. Sudarshan and Mitesh, we saw a big cut on Friday, the last hour in particular. Now the GIFT Nifty is indicating a 150, 160 point downtick at the open itself. The pre-open settling lower. Obviously, these are numbers not believable. Though as we move forward, what's your sense? Do you think the opening dip should be bought sometime during the day? Sudarshan, go first.
Yeah, good morning. And no, I do not think we should be buying any dips. We have no idea whether this is the low of the sort of correction that we are now undergoing. It's hardly likely that we will dip only 150 points when the Asian markets are much lower. So my suggestion is if you have short positions, for the time being, take profits and be willing to sell again into any kind of a dead cat bounce. We probably look to breach 25,000 on the downside and lower levels. This market will not stop until we start building a base. So this decline is not a base. Look to go short or stay away. Do not buy.
All right. Go short or stay away. Do not buy. Mitesh, would you agree with that?
Yeah, see the initial feeling, I would say yes. I think, very clearly this market should possibly, if not decline a lot, should suggest some kind of continuation on the downside, given the fact that the structure is weak and the global cues and the negative news flow which is happening means that, there is a good chance of the indices possibly declining a bit more. Having said that, I think, buying only, if we get close to about 24,900, which is where a trend line comes in, which is where the last time when the markets had dipped below 25,000, we got a closing of around 24,700. That rising trend line is at 24,900, 920 zones. Around those levels, I would see if there's some kind of show of strength, but otherwise, it's not a market which I would want to buy into.
Right. Individual stocks then, would you have short recommendations today, Mitesh?
I have more of short recommendations, Mangalam. I have tried to fit in ONGC as a buy purely because of the fact that the way crude has moved up. So 3 shorts and a long. ONGC, as I said, is a stock on the long side. Keep a stop at 274, look for targets of 290. And on the shorting side, see, because we have a gap down, my idea is not to immediately rush into a short trade, but, in case you get a mild pullback or the stock hasn't fallen much and still offers you good risk-reward entry, then take a short. So Maruti is first. Keep a stop above 15,011. Look for targets of 14,400 here. Then a short on L&T Finance with a stop at 288, half 289 for a target of roughly around 271, 270. And AU Bank is the final stock, the last stock on the selling side. It's a sell with a stop at 975 for a short-term decline to about levels of 920.
Sudarshan, hi, good morning. What would your stock calls be?
Morning. Well, they are roughly the same. 1 buy and 3 sells. BHL is the only buy. Stop under 260. Max Financial is a short with a stop above 1860. Asian Paints is a short with a stop above 2420. And Trent is a short with a stop above 3980. These were intrinsically weak stocks anyway.
All right, gentlemen, thank you so much for that. We'll come back to you, as soon as the market opens, and just before that for your calls at 9:10 as well. Meanwhile, don't lose sight of the rupee. The rupee is opened weaker. From closer to 91 on Friday, it opened at around 91.25, and now swiftly we've seen a further weakening to around 91.31 to the dollar. So with higher oil prices, higher commodity prices, and global uncertainty, do we see some further weakening in the rupee or not is something that we will be tracking through the course of the day. Right now, 91.31 against the dollar for the rupee. Could higher crude be an impact on that, and as a result of which, what's the outlook on the energy space because of this uncertainty? We do have Prabal Sen, who's the energy analyst at ICICI Securities, joining in. Prabal, a big spike in crude is what we've seen, but as global experts were also saying that it hasn't sustained beyond a certain threshold. A lot of people who were worried about it growing all the way up to 100, 120, 130 as it has in the past believe that this time around it may not so much. In light of that, what's your own house view on crude from here on, given the situation, and stock-specific calls?
Okay, so first of all, good morning. I think the risk premium that got built into crude prices, if you look at the last major conflict, and it's unbelievable that you have to say something like this, but the last major conflict that happened in April 22, there was an immediate $30 to $32 risk premium that got built in. But then you have to remember that Russia's contribution to the global energy markets is sharply higher than the absolute exports that comes out of Iran at this point of time. Iran, at the end of the day, exports about 1.3 to 1.4 million barrels a day. And, to that extent, I think that if only that supply were to be disrupted, that can actually be absorbed by the markets, given the kind of supply dynamics we have seen developing from the US, Guyana, Venezuela coming back into the market, and even the surplus that is there with Russia because of sanctions from a practical standpoint that can be brought on. The issue, of course, is the Strait of Hormuz and the proximity to it. 21 to 22 million barrels a day of oil goes through it. 20% of global traded seaborne LNG passes through it. So there is really no mitigation one can do, to put it very bluntly. If the strait is, let's say, closed by whatever measures or whatever means for a month or so, there is no inventory, there is no spares capacity from anywhere that can actually mitigate. Now, news events that have been coming in today, Iran clarified that they have not shut the Strait of Hormuz, and that automatically or immediately puts a brake on the kind of risk premium that gets built into the crude prices. Your crude prices, which are up by about $3 to $4 today, that number would have been easily higher by maybe even $10, $15 if there was actual disruption on the strait. Now, in the current environment, in terms of recommendations, frankly, upstream obviously stands out. We have seen in the past that windfall taxes have been imposed again in July 22 when crude prices persisted above $100. But in this instance, given that they are barely above 75 at this point of time, crude stocks like ONGC and Oil India both will benefit, and downstream, of course, will probably continue to remain weak. Even gas stocks, what we really envisage is if crude continues in this bullish vein, given that LNG prices, at least as of now, are mostly indexed to Brent prices, even their input costs could actually rise. So we would probably, at least from a short-term perspective, be negative on the space with a few offshoots, let's say like in ONGC and Oil India, and from a longer-term perspective, continue to be constructive on HPCL and BPCL and CGDs, but not for the next 3 to 6 months. I think that remains a period of uncertainty as of now.
But the impact on crude prices, right? At the moment, as you said, the $3 to $4 risk premium that's being built into the crude prices is appropriate, considering Iran only contributes 3% or 1.5 million barrels to the overall oil supply market. So that is done. And now the near term depends on the extent of disruption in Strait of Hormuz. But do you think that, and there is no way to know that as of now, the way it'll play out. But do you think the impact on the crude prices will be limited to the days that the disruption is in place? Once there is a ceasefire, where does crude head? Because ultimately, it's not about a near-term call and the near-term impact. It's about the medium term. So in that sense, do you think what has happened in the Middle East changes the trajectory of crude prices and therefore the investment calls?
I think you're asking me to really stretch my foresight skills. I think one of the things that has been different, if you look at conflicts that have happened in the Middle East on and off over the last even 10 to 20 years, Iran has threatened a lot of times to target oil infrastructure across the region or the Strait of Hormuz, but they've never actually done it. This time probably is the first instance where we are hearing some stray reports that even oil rigs, deep water oil infrastructure could be at risk. Even the presence of US oil majors, wherever they are in the Middle East, those could be actually even targeted. So it's very difficult today to put a finger on, where the sort of impact on the energy markets will be. If a ceasefire is called, I think the market dynamics remain what they are. Supply continues to be slightly ahead. If you look at every forecast that we are looking at, global supplies are set to be added by at least 1.2 to 1.3 million barrels a day over the next 3 years, including, of course, gradual restoration of the OPEC supplies. And demand, depending again on who you are talking to, is going to be anywhere between 0.9 to about 1.1 million barrels of oil per day. So if that's the situation, if the physical market once again starts to determine prices, there is no reason for oil prices to actually expand to more than $70, $75. I think that is a very, very comfortable range for everyone concerned at this point of time. So in the case of a ceasefire, I think, yes, structurally speaking, some things may have forever changed in the Middle East, but those are more, from a I think other, sectors might actually see the impact or your perception of some of the other Middle Eastern cities might take a hit. But from an oil market perspective, ceasefire hits, your demand supply, I think, continues to remain fairly comfortable for crude to remain in a narrow range. I think that's the best way I can put it.
Okay, all right. Thanks, Prabal, for joining in and filling us in with all of those thoughts. Hopefully we see some cooling off with regard to the geopolitical issues, and then we have you back to reassess the situation. It's 9:10, so let's get Sudarshan for his 9:10 call. Sudarshan?
Asian Paints, sell Asian Paints with a stop above 24.20.
Okay, all right. Asian Paints, I think it's already, 20. What's the target on that one? Sorry, I missed it.
I just give a stop above 24.20.
24.20 is the stop, and currently it's opening down 3% odd, but Sudarshan believes that it has further downside. Got it. Mitesh, what about you?
Sell on AU Bank and would look at targets of around 920.
Got that. Sell on AU Bank and a sell on Asian Paints. Sudarshan is now joining in with the key takeaways from the SEBI chairman interview.
So SEBI chairman had an interaction with majority of the channels over the weekend, and there are some of the important topics that he has highlighted. So I've taken just few important topics. First one is commodity options. Second one is weekly equity options. Third is cash market. And fourth is STT. And last is related to RBI's proposal. If you remember, there was a proposal related to prop trading. So first talking about the allowing FPIs in commodity options. Now SEBI is saying that SEBI chairman, commodity derivatives have not been looked at in a proactive manner in the past, but now he will see allowing FPIs in options trading in commodity derivatives soon, and working group is going and doing this study, and that will be presented to CDAC. CDAC is Commodity Derivative Advisory Committee, and once that's done, then the consultation paper will follow. So we might see options trading in commodities very soon. Next one is weekly equity options. Now, SEBI chairman has said that short-term weekly options remain a concern. SEBI believes that the going forward, one thing that can be focused on is the longer term, and he's concerned about short-term dated options or weekly options because there is a hyperactivity in that equity options. Now he said that SEBI has put out different risk metrics, position limit, but will continue to monitor the data and put the data before talking or suggesting any measures going forward. Next is to make cash market more liquid. He says cash markets must further become more liquid, and working group is looking to reviewing short selling and SLBM framework. So there was a question related to STT. Is SEBI believing that doing away with STT on cash trade can be seen? He said will not comment on any recommendation that he has made to government. Last one is RBI's proposal on funding prop trading. He said he has received suggestions from NME, but those suggestions are not very convincing as of now.
Okay, all right. Thanks a lot for that, sir. Let's hop across to Gaurav. Fino Payments Bank, there was a bit of a sniff in Friday's trading session and the stock was under pressure. And now the management has come out and given an official release. Gaurav, run us through that data point.
Well, as MD and CEO of Fino Payment Bank, Mr. Rishi Gupta has been arrested, and this is from the GST department. Now, what the bank has said is that the investigation is related to the business partners of the bank and not related to the GST issue, which is relating anything with the bank itself. In fact, if you go in details, what they are saying is that this is specifically to the program managers who have relationship with banks, not just with Fino Payment Bank, but with other banks as well. And MD and CEO, Mr. Rishi Gupta, have nothing to do with the actions which were done by the program managers, but to comply with the law, he has been arrested. Now, if you look at the action plan going ahead, Mr. Ketan Merchant, who is the CFO of the bank, has been appointed as head of organization, and he will oversee all the day-to-day activities and all the activities which were taken care of by the MD. But all in all, if you look at Friday's trading session, there was some speculation. So the stock was already down 7.5%. And today, in the opening, we are seeing the stock is down almost 8%. So 15% fall because it's a corporate governance issue and market may not see it in a positive way. And that is the reason why we are seeing some pressure building up in Fino Payments Bank.
All right, thanks a lot for that. There's a big difference actually in a lot of stocks in the NSE as well as the BSE rates. Tata Motors CV, if you can quickly pull up the NSE and the BSE rates, there's a very, very wide gap between the two. So I think we should get some of these rates up for you. Gap down 2% lower. By the end of today, you'll actually want to end higher. That's Tata Motors CV. I think that's one of the rates. Yes, big difference out there between BSE and as well as NSE rate out there. Closer around 70 rupees difference or thereabouts.
Well, the bell has gone, and straight away, the first tick on the Nifty is 24,850, 880, 890. now trying to settle around that level. It's a 250-point cut, 1 percentage point lower on the key indices. Mid-caps are taking a sharper fall. The mid-cap index down 1,000 points at open, 1.6% down. And look at that advanced decline ratio. We've got about 150 stocks advancing for 1,900 stocks declining. That's a terrible advanced decline ratio to begin trade with. It's settling around 24,900. So let's just quickly take stock of some of the big movers and that heat map. Well, it's largely red. It's only 4 nifty stocks in the green, and it's ONGC right on top. Defense is seeing some buying, BEL, but on the way down, Interglobe Aviation, L&T are the big losers, and they're the ones most exposed to the Middle East tensions. And then there's pain across the board, broad-based selling. But this 24,850 is an important support level for our markets. We've opened there. Let's see whether we can hold or climb higher.
Take that point, Rima. 24,850, thereabouts, important support zone, because if we break that, then the budget day low comes into picture. India VIX has seen a big surge as expected, up around 11% right from the word go. And as we speak, even in the broader markets, apart from the oil and some of these defense names, so Oil India is doing well. Bharat Dynamics is up around 2%. And a few of these gold financiers. So we have Muthoot Finance, which is marginally higher. And MCX is just about less than 1% higher, perhaps on some commentary coming in from the SEBI chairman. But more or less, it is sharply lower for a lot of these oil marketing companies. IOC, HPCL, BPCL, all of them down between 4 to 5%. Then you have Apollo Tyres, which is down 4% as well. Crude is an important input for tire makers as well. And the IT sell-off continues with some of these mid-cap IT names seeing a bit of sell-off. And then from the exporter names, we do have, some of these logistics players, all cargo logistics and the likes, who do have some exposure to West Asia, are all lower. So by and large, it's just one way, and that is down. 2,100 stocks which are in the red, for about 95 stocks which are in the green on the NSE.
Well, that's right, Mangalam. A few stocks that are gaining because of the spike in crude oil prices. As you mentioned, ONGC, Oil India, HOEC, all three of them, in fact, have opened up in the green. And there are very, very few stocks in the green. So, just highlighting those three names, all of them have moved up close to around 3%. Silver ETFs, if you pull up some of them, all of them, in fact, have gapped up because silver has seen a surge of more than 7% over the weekend. Silver ETFs move up. The only listed play, it will be Hindustan Zinc, in terms of the move in silver prices. So I think Hindustan Zinc as well has opened up with some green or more or less flattish. It's up actually 2% in an otherwise wobbly market. Vedanta, that's more or less flattish. That's down close to 0.5%. But I'll tell you what, it has a double engine playing out there. One is on crude oil prices moving up. They'll gain out there. And besides that, they hold stake in Hindustan Zinc. And Hindustan Zinc itself is up close to around 2%. Muthoot Finance, that's the other name. That's a play on gold prices. Stock has seen a sharp correction from the recent peak. So I think Muthoot Finance as well has opened up with a gain of close to 100%. Had highlighted a couple of these stocks in the morning chart. Let's pull up the defense index, because that one should see some traction in today's trading session, given the kind of news flow that we've seen all across the globe. So that's one of the lone indices that are up close to around 0.5%. The Nifty panic low at the start of trade was close to around 24,500. We're holding around 24,900. The Nifty Bank is down 500 points or thereabouts, and the number of stocks advancing just around 200 stocks or thereabouts. So guys, just one quick point. The first half of March is seasonally a weak, period for the markets. So you'll have a lot of mid and small caps that will get, as it is, see some selling. And now this will be amplified because of geopolitical risk as well. And from a longer term perspective, this period could actually be providing a very good opportunity on individual stocks because of the dual factor that's playing out. One is the seasonal factor. Second part is the geopolitical issue as well. And both of them have a temporary phenomena in nature. So I think that's why we should keep an eye out on that. By the way, RR Cabell, one of those stocks that have a good amount of exposure to the Middle East, it's started off with a sharp downtick, and that dip has quickly got bought into. Only 41,000 shares traded, but that intraday chart should come off you. Good recovery from the lows.
All right, we take that point. Nigel, the defense stocks now, they are picking pace. We have Paras Defense, which is up higher. Bharat Dynamics is up 2.5% higher. Solar Industry is a word that, a company that Samir did speak about as well. That's about 1.2% higher. Mazagon Dock Ship higher. Hindustan Aeronautics, one which hasn't participated in the recent rally that we saw in the defense names as well, has seen a mild green uptick as well. So that's the one that should come up for you. Barring that, we do have some decline that we're seeing, further decline that we're seeing in a lot of these, infra names as well. So IRB Infra is down about 4.5%. We've seen some decline in Suzlon Energy. That's down about 4% as well. Adani Total Gas, that's the other one, which is down about 4% too. Kalyan Jewellers has some exposure to the Middle East, West Asia as we know it. That's one which is lower by about 3% as well. So we will monitor the market as we move forward. A lot of these stocks which are under pressure. Now the number of stocks which are declining has actually moved higher to 2,400, even though the number of stocks which are advancing has moved slightly higher. So it all depends on whether we go ahead and defend that 24,850 sort of mark. The early trades are telling you that yes, maybe that could be in defense, because we've swiftly jumped about 75 points from those lows, and we are closer to 25,000 than we were at the open. The India VIX 2 has spiked to around 16%.
All right, just to run through what's happening across the Asian markets. Well, the fall that we're seeing is largely in line with Asia. The Japanese index Nikkei is down 1.4%. The Taiwanese market is down about 0.3%, 0.4%. Kospi today is shut for a public holiday, but Hang Seng that's down about 1.7%. So the fall that we're seeing, 1%, is largely in line with the slide across the Asian markets. Sectorally, the only index which is up in the green is defense, and that's holding strong, picking up pace, 1.5% now. The defense index opened up with a gain of about 0.5%, but now it's adding on some more steam. The Nifty Tourism Index is the hardest hit. That's got a cut of 2.3%. Small cap index down 1.8%. Realty continues to be the hardest hit, 1.7% lower for the day, 12%, 12.5%, 13% lower since the start of the year. And IT should come up for you on your screen. On Thursday and Friday, we saw a little bit of resilience coming through in the IT stocks. But this morning, in line with the pressure, we've seen the IT index open with a cut of 1.1%. But let's get you a special conversation with veteran investor Christopher Wood. He says US President Donald Trump will back off his tariff agenda as the country is approaching midterm elections. My colleague Nimesh caught up with him and began his discussion by asking him about the geopolitical risks and the rising tension right now. Listen into a slice of that conversation.
Geopolitical risks have been there, as you rightly say, for at least 4 years.
Yeah.
So it's extremely hard for markets to discount geopolitical risk. In fact, they can't. So the only way you can discount it in a portfolio is via gold, and I would say this year via energy stocks. So there's probably a bit of a Iran risk premium in the oil price today.
Chris, you've been a big-time bull on gold, and it's proved right in the last at least 2 years. Gold has been the best performing asset class, so to speak. With the kind of rally we've seen in the gold and the commodity stocks per se, what's your call now? Do you see further upside on gold from here, or it's a time to book profits into gold?
No, in the medium term, I see big further upside in gold, but I wouldn't be surprised to have a period of extended consolidation.
Okay.
Sideways consolidation, to maybe sideways to down, but I'm talking tactically.
But you're not expecting...
if I had a leverage position in gold, I would have taken profits.
Okay, but what's a long-term goal? What's a long-term target on gold? Say maybe 2 years, 3 years down the line.
Formally, my long-term target is now 6,500, but I mean, gold can easily go to 10,000.
Oh, wow.
Because if you look at, I'm talking US dollar terms, so in US dollar terms, the growth of M2, you can easily get $10,000 on gold. But my formal target based on is currently 6,600.
Sure. Apart from gold, anything in the hard commodities that you like and you're looking to add into it, the silver, copper, aluminum?
No, I have copper stocks in my portfolio and oil energy stocks, but if I only own one, it would be gold.
Okay.
Silver is high beta gold.
Sure.
But it's not, if you're a purist, you will only own gold.
What is the best case as far as the US equities are concerned for this year? How much?
My view on US market, I've got a stronger view on the relative story in the absolute. So my view has been since the end of last 24 that the US has made an all-time peak as a percentage of world stock market capitalization. So to be precise, the US peaked at 67% of MSCI All Country World Index.
Okay.
And I think that's an all-time peak, and that's consistent with my view that you're going to get a derating on the hyperscaler stocks, which dominate the US market. Because of the huge capex, which is making these companies generate less free cash flow. So I believe we've begun a period where markets ex-US will outperform. That happened last year, and I expect that to continue.
Okay. Now coming to India, Chris, because you travel to India so much, and there's a lot of fan following in India as well to read to what Chris believes on India. I saw a tweet, you recently met Piyush Goyal as well, the Commerce Minister. You think from a trade point of view with the US or with Europe or with the other countries, it's largely been settled now? There is no downside risk in terms of tariffs?
Well, I think it's good news that obviously the European-India trade deal has finally happened. And it looks like Donald Trump was a spur for that to happen. Sure. So that's a sort of indirect positive. On the tariff thing, I personally think there's a chance that Donald Trump backs off the whole tariff agenda, although he's not going to admit it in public.
Okay.
The reason I say that is the polls show, we've got the midterm elections this year, and the polls show that the tariffs are not popular amongst ordinary Americans because despite the inflation data in the US, which looks relatively benign, it's quite clear from the opinion polls that ordinary Americans feel the cost of living. And I just don't think the tariffs are popular.
Okay.
So I think there's a good chance he sort of quietly backs off the whole agenda without admitting it.
Okay. Well, that will be a great news, right, for countries like India.
Yeah.
But even if he doesn't back off...
Because it's not popular. Right now, he's losing the midterm elections.
Sure. Even though if he doesn't back off, still at the current rates what we are with the US and with the European nations, you think it's pretty okay for India to do well from here?
But I don't. Hopefully, the experience with the US prompted the Indian exporters to look for other markets. I think one unfortunate consequence of the tariffs, though, is that I think the central bank allowed the currency to weaken more last year to support the export industry. But personally, I think that was a mistake because the rupee going through the 90 level is a key psychological level. And I think a lot of Indian corporates were not positioned for that because I've met many Indian corporates in the last few years who basically have been of the view that depreciation is going to be less going forward. So I think that's been a negative. It's also negative from the point of view of foreign investors.
Yes.
Because it made the rupee India underperformance worse last year. And again, it wasn't expected.
Sure. From a flow perspective, Chris, because you spoke about rupee being a bit negative for the FIs, we've seen first signs of FI money coming back into the Indian markets. This month, we saw nearly $2.5 billion of inflows from the FIs. The FI holding in India is the lowest in the last, say, 10 to 15 years. You talk to a lot of global investors as well, look at India. What's the sense you get? Is it that you're going to see a lot of FIs coming back to India now?
No, you're only, for real flows into India to happen, two things have to happen. One, the Indian market has to fall a lot so it becomes very cheap.
Okay.
So that, in my view, will only happen if we suddenly see these SIP flows stop.
Breaking off. Okay.
Which is not my base case.
Sure.
My base case, the flows keep coming. So in that case, the only way we're going to get big foreign money into India is if this whole semiconductor trade peaks.
Okay.
And we get a sharp sell-off in the semiconductor stocks in markets like Taiwan and Korea.
Yeah.
And you know that the more the market questions the capex, the more the chances of that grows. So if I had to guess on it, it's more likely to be the second than the first.
Okay. One from a sector point of view, the one sector which everybody's been talking about of late is a sharp sell-off in the Indian IT names. Sitting out of India, looking at all global markets in terms of tech stocks, what's your view on Indian stocks now? I know your analyst has downgraded recently all the Indian names. But
the IT services.
Yeah, IT services. But what's your thought on the IT services?
No, I haven't got the IT services in my portfolio, but frankly, I never have. Never had because I've always had a Indian green venture portfolio more focused on the domestic side. But at some point, there's going to be a counter-trend rally in these software stocks because it's not like these businesses are disappearing tomorrow. So I think the role of Indian IT services will be to help corporates migrate to small business models, the small language models designed for their own purposes. So there's a role for the IT services, but you know their long-term growth, revenue growth, is going to be less than people were hoping for probably, and they're going to be, I think, importantly for the economy, the risk is they're employing fewer people. So while there can be a counter-trend move, I don't think they're a structural hold. No.
But do you foresee or do you see a risk of a second-level impact on say, consumption and the real estate stocks in India on the back of sharp sell-off in the IT names?
That risk exists, definitely, but I think that risk in the first instance is greatest in the developed world.
Sure.
So these predictions of all these white-collar job losses, which are potentially very bearish, are, if that's going to happen, it's going to happen first, in my view, in the developed world.
Okay, okay. But
and then it's going to happen first in America.
Sure.
And then you will have a risk on the consumer lending portfolios.
No, the reason I asked you is because, in your India model portfolio, you have exposure to a lot of the real estate names.
Well, not a lot, but
some of those real estate names you have an exposure to.
Yeah, I'm quite comfortable.
Okay.
Now, the foreigners tended to own those stocks, not the domestics.
Yeah.
So I think they've been hit by foreign outflows.
Sure.
But the way I see some of the prominent Indian real estate companies is that they've taken market share. Yeah, these stocks are not expensive, so I'm comfortable. Yeah, I'd rather own them than the IT services.
Okay, interesting conversation with Chris there, but let's get straight to the markets. The markets are still under pressure, the Nifty as well as the Nifty Bank. However, we have come off a little bit from the lows. The Nifty has come off close to around 250 points from the lows, and the Nifty Bank close to around 300 points as well. But the more important number is going to be the advanced decline ratio. There were very, very few stocks that were advancing in the first few minutes. At least now you've got close to around 300 stocks. And I'll tell you what, by the end of today, you'll want that number to maybe double from here on. That's what will make portfolios feel a little bit good, because a lot of stocks actually have bounced off the lows. The problem is the spike that we've seen in crude oil, and for a country like India, it hurts, right? Because we're importers, it'll hurt our surpluses that we have, the deficit numbers as well, and put some pressure on the rupee as well. So macro indicators get a little bit hit when the crude oil prices spike up. But there are a few stocks, in fact, that do gain. So ONGC, Oil India, and HOEC. All three of those names, they are beneficiaries of the spike that we've seen in crude oil prices, and that's why all three of them are doing pretty well in trade. But the OMCs, they get hit because, their margins come under pressure. So that's why you're seeing the OMCs, HPCL, BPCL, as well as IOC, all three of them are under pressure. Precious metals as well did spike up, whether you're looking at gold or even silver. So you have a few of those ETFs that are traded. Well, they are seeing a bit of a gap up. And you have Hindustan Zinc as well that's holding up, because that has this is the only stock that you can place silver from the listed universe. And Muthoot Finance, after the kind of correction that you've seen, more than a 20% correction, that stock has popped up close to 2% because it's a gold financer. Travel plays are hit. Interglobe is down. SpiceJet from bombed out levels. Well, that stock as well is under pressure. And, Indian Hotels, that's down marginally close to around 2%. So all those travel-related names, they are under pressure. And for Interglobe and SpiceJet, the other problem is ATF prices as well will perk up. As is, they were higher on a sequential basis. Now you'll have cancellations, and added to that, the input cost will spike up. A few more losers should come up for you on the screen, and those that are falling on rather large volumes, Suzlon, Voltas, as well as Inox Wind, all those three stocks under some pressure. So net-net, we're down. We're popped up a little bit from the lows of the day, and by the end of today, you'll want those lows to get defended, which coincide with the budget day lows and the number of stocks advancing at around 300 stocks. Hopefully, by the time we end up, it'll be a little bit better. Back to you guys.
Good point, Nigel. So there has been some recovery from the lows. The question is whether that sustains or not from here on. The second half of trade will be extremely crucial ahead of the holiday tomorrow and the weekly expiry. But let's welcome our market master for the day, Manish Tonthalia, CIO, MK Investment Managers. Manish, there is a fair amount of geopolitical uncertainty, but this comes at a time when some of the domestic cues are looking a lot better than what they were, say, 6 months ago. Would you, look at deploying more capital in the same old names, or are there any other fresh themes that have opened up for you after the correction that we've seen?
So now we are in an AI environment, and I think natural resources is one area which is likely to benefit in an AI environment, and anything to do with, let's say, critical minerals, energy, power, power transmission. These are some of the areas where incremental capital would be looked into for deployment.
Okay. Anything else? Manish, we were just chatting with Samir, and he was also saying that, there's no point looking at day to day in the times of these skirmishes. He will actually use this opportunity today as a buying opportunity, the dip today. So would you be looking at deploying the cash that you'll have on the books on a day like today?
Yeah, 100%. So incrementally, whatever flows we are getting, we are buying. And even today, we are buying. So, we have seen that in the past also, whenever there's geopolitical skirmishes and market gives a knee-jerk thumbs down, in the next 6 to 9 months, all of that is probably recovered. The base case scenario currently is that this is not going to last too long, whatever escalation has happened, because that would be reflected in the oil prices. And of course, we don't know whether it's going to last. But today, the consensus opinion is that, this is going to end sooner than later. We have got to keep an eye on oil, and we have 74 days of reserves, petroleum reserves. So incrementally, markets have been reeling under negative news flows for quite some time. And, fundamentals warrant that any level between 24 and 24,500 is par the course as far as the bottom in the markets are concerned. Today, we are in a risk off, and I would probably believe that that gives a golden opportunity to buy stocks.
Okay. All right. Hi, Manish. Good morning. Good to see you in. Golden opportunity to buy. But what to buy? Manish, name a couple of stocks, something that y'all are interested on. A few sectors are getting pummeled right now, whether you're looking at aviation stocks, some of the travel and leisure related names, paint stocks are getting hit. But, hopefully things ease out from here on. Any of these are finding, those interest from you, or maybe the defense names. They've bounced up in the last 1 month or so, but they're still far cry away from the 52-week highs.
So auto components, tire companies, which have also got hit today, these are within the buy list because, auto space as a whole is looking quite bullish from the next 4 quarters point of view. So that is one area. Any correction would warrant an increase in exposure out there. The financial names, insurance included, would be on our buy list. The pharma, healthcare names would be on our buy list. Select consumer discretionary, example, durables, commercial vehicles, power transmission, select defense, of course, would be on the radar now that valuations would look more palatable. So see, these are some of the areas which look interesting. Of course, in an AI environment, what do you do with IT stocks, wanting to keep an underweight stance? Not that we have made it zero, but clearly an underweight stance because multiples are getting corrected. So this is how we are placed currently.
What about financials? Everyone's overweight on them. It's not necessarily an international exposure, purely domestic. Do you think there is still an opportunity out there? And in that, PSUs, private sector banks, how do you go about it?
See, I think the PSUs are better placed because valuations are lower than private sector banks and they have a decent exposure both to the retail credit as well as corporate credit. Corporate private capex is looking up. And I think if you see the numbers, the NPAs, the credit cost, the operating leverage, all of that seems to be pointing slightly on the better side vis-a-vis private sector banks. We have an exposure to both private and public. But I think I'm leaning more towards more positive return from the public sector space as opposed to the private sector space.
Manish, just do you think there will, you said the base case is that it's status quo, there is no long-lasting disruption, things get resolved. But do you think as the situation resolves, there could be some more long-lasting damage which influences investment opportunity? Maybe it's a low probability event, but do you think there could be any, major changes in the economic landscape because of what's happened?
I don't think so. In the current setup of things, if things were to get normalized, emerging market as a basket would be positive looked upon, and in that bracket, since India has not performed over the last 15, 18 months, I think incremental flows would be looking to come to India. Valuations are conducive, domestic macros are okay, earnings growth is par the course, outlook looks okay. So from that point of view, emerging market as a basket looks okay. If things get normalized, news flows tend to be normalized, we should see inflows rather than.
Manish, what about central bank support? The RBI has been infusing liquidity and done a very good job, actually. What are you all penciling in with regard to central bank action from here on? This crude spike, it puts it into a little bit of a tizzy, and the rupee as well has weakened a little bit. Do you all expect further rate cuts in this year? Because in the near term, that'll put pressure on some of these banking names. But in the longer term, things should recover. As we are seeing, credit growth has picked up now. For the NBFCs, the cost of borrowing as well, the benefit is likely to flow through in the coming months.
Yeah, interest rates would have a bearing not only in India, but globally. And of course, if this war was to last longer, it would pressurize oil prices. Would lift interest rate because, there's going to be inflationary pressure. Right now, inflation is under control. As for now, we are building in status quo, no cuts in rates, given that we've already seen front loading of rate cuts, and it would be a wait and watch situation. I think this would basically apply globally and not only pertaining to India. But even without that, I think liquidity is okay, and that's not too much of a concern. So all in all, not too positive or negative about rates at the moment. As the situation evolves, we'll pencil it, but as of now, status quo.
You spoke about how critical minerals, etc., on account of AI. Can you give some more color on the way to approach it from an investment point of view? What should we look at?
All the metal companies, these are basically plays on critical minerals. You have the established names. Copper is going to be in demand long term. Aluminium, silver, obviously, and a few others where rare earths, where we don't have too much of a direct play. But these are some of the areas where these are natural resources which will be required. Energy amongst them will also be required. So these are some of the areas in critical minerals which would be, according to me, a direct play on AI into the medium to long term, as opposed to GPUs and RAMs, where India doesn't have a play, and we are catering to only the infra buildup from the point of view of HVAC and gensets and generators, wires and cables. Apart from them, critical minerals, according to me, would be a direct play on here.
All right, take that point. Thanks a lot, Manish, for joining in. Wish you good luck for the current uncertainty, and obviously for all the investment bets that you make. We take a short break now. Come back on the other side. The management of Supreme Industries joins in to talk about the outlook going ahead.
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोबूट।
Welcome
back. The recovery from lows is underway. The Nifty is still down about 200 points, but well over 100 points off the lows of today's trading session, moving towards that 25,000 mark. The management on our show right now is Supreme Industries. The stock is up 15% in 2026 so far. In fact, Motilal Oswal is bullish on the sector. Supreme Industries, the brokerage house, believes that the PVC and pipe industry are now entering a structural upcycle. We have with us MP Taparia, who is the MD of the company, who joins in. Thanks a lot, Mr. Taparia, for joining in. You had earlier pointed out that, the worst of prices is behind you, and from January, you had started to see a bit of a price increase. Could you give us a sense of the quantum of the price increase that you've seen so far, and what could your exit quarter margins look like?
The local raw material producer increased the price of PVC by 10.5 rupees a kilo. On our company margin, I will convey to you on 27th April.
All right, on 27th April for your company. No, because you had revised the margin guidance lower, to around 13.5% to 14%. Okay, could you give us a sense then on what you're targeting for FY27 in terms of volume growth and margins, given the sort of price increase that we've seen in PVC now?
No, you see, PVC price crashed during the year 2025 from $700 in the beginning of April 2025. And December, the interim booking is collected to inventory loss PVC producer. And now the prices of PVC import is gone up to 710. But this happened before this US-Iran tension. Now the market will open up today only, then we will know what is going to be the reaction on the internal booking. I cannot say today anything. Today only we know that most of the booking has been withdrawn.
The booking has been withdrawn on account of tension, sir?
In account of this, there is too much increase in the freight rate because the Strait of Hormuz was closed. Suez Canal was already in trouble. So people want to watch what is the freight rate going to be. It's going to take longer voyage time. So new freight rate must be announced, then the new booking will come. There's temporary reaction. The booking has been withdrawn.
Okay. And how much, sir, do you depend on, this kind of a booking? Will it impact the financials of a company like Supreme Industries, or do you already have inventory and therefore Q4 should be unaffected by what happens in the near term?
As I told you, the price is crashed from $700 to $580. At $700, it was all affordable. And the prices before the booking was closed was $710. So there was no.
Okay, all right. I think we seem to have snapped that line, but we'll just try to get Mr. Taparia back. The good news is that he's saying that there is a price increase that's come about, not commenting too much in terms of margins, but it'll be interesting to hear about the uptick that they've seen in volumes and the reason that we're seeing something like that. So just waiting by, and he was making some valid points with regard to uncertainty on the movement globally, which in turn could impact some part of their business as well. But we'll try to understand. Mr. Taparia, I think, is he back with us? All right, not that. Let's do a quick market check then. When we started off trade, there were only, I think, around 50 stocks that were advancing. When I just went across to the wall and I did a quick market check again, we had close to around 300 stocks that were advancing. Now that number has moved to close to around 500 stocks. So clearly, various stocks are getting bought into. Those initial margin calls, they have been gradually moving out. I think that will continue for the next half hour to around an hour or thereabouts. And then, in fact, we could see a more sustained recovery, if at all. A few stocks, Tejas Networks, the stock had a big run in the last week itself. And this morning it opened up with a cut of around 5%. From those lows, Tejas Networks has seen a big spike up. I think in the last 1 month, it's up close to around 40%. But keep in mind, this is a stock that came down by, to a third of what it was at its peak. It was a 1,000 rupee stock, came down to around 300 rupees. And from there, it's seen a big spike up. But I think the most heartening aspect today is the recovery that we're seeing in the broader markets. And defense stocks, they're really the ones that are bucking the trend today. So defense, whether you look at BEL, that one's the big mover. And a couple of these metal names as well, Hindalco as well as Tata Steel, both of them are opening up strong, trading in the green. Yeah, Manglam.
Yeah, you spoke about a couple of these defense names. Look at Solar Industries. That's recovered about 6.5% from the lows. That's about 3% higher as well. Bharat Dynamics is the other one, which is up 6% from the lows as well. And one of the stocks which has actually seen a big cut from its peak, it's Bluestone Jewelry. Over the last few trading sessions, it found some funk. And currently as well, while it opened about, 4 or 5% lower from those lows, it has seen some buying. So from 417 all the way up to 455. as we speak right now. So it's a recovery of almost 10% from the lows. This month has been one of the few positive months that we've seen for the stock in an otherwise decline of almost 45% from the peak. But let's get you an exclusive conversation. Tuhin Kantapante completes his first year in the office as the SEBI chairman. He says they have been concerned about short-term weekly options, spoke about making cash market more liquid and FPI registration timeline as well. Listen in. He had a conversation with Prashant.
It's basically, I think we have to zero down on the problem area, which is short-term options, because F&O is a very wide space and using it just very casually is not appropriate.
Yeah. So weekly options.
Futures are very important.
Yeah.
Options are important. We would like a longer-term framework, longer-term derivative framework, the necessarily place where people can hedge and people can short. We have stock futures. So the market is quite big. And here I think we are concerned more about short-term dated options, weekly options, where we said that the activity was high, there was a hyperactivity,
yes,
not necessarily serving a very great economic purpose. But there, in consultation with industry, in consultation with various others, our own thoughts, we put out a framework in terms of market regulation, bringing in different risk metrics, position limits, upfront payments, expiry day margins, and so on and so forth. And they rolled out in on different dates. The last of it was in December. We will continue to monitor this and have the data put it out before suggesting any measures. So therefore, I think we need also a stability, policy stability, in the sense that there are certain things that we do, and then we also wait that, how that market is panning out.
So you wait for that to take effect, show up in numbers, etc. The statistics, you will assess that and then put it out in terms of, so that is a process that is underway?
That's right. I mean, it will take some time,
okay,
but
okay,
that will indeed be the process.
And if required, after you put that out, after more discussion, I mean, as is appropriate, you will decide what to do. If
Yes.
there's anything more which needs to be done.
Yes, so therefore I think we have become more data-based, one, and secondly we are also looking at the measures that will help, because it's not really, I mean, we can actually be very reactive and try and put in some measures which may not be effective. So therefore we need to really actually deliberate what are the more effective measures, if at all, if the data suggests otherwise.
So as you said, the last of these measures was put in place December, right? How long will you wait before you start to, I mean, before you can take stock in a serious way?
I think this is your 1 year thing, should not be really concentrated on forward.
I have a long list of questions, sir, but I thought I will start with, it's something which is of great interest to you.
So you'll come to know when such a thing is there.
So on the cash side, right, we're talking about equity derivatives. Will you also kind of look to increase market depth and those kind of things? I mean, making cash a more attractive.
I think it's indeed our endeavor that the cash markets must further become more liquid. And whatever we need to do, we do have a working group looking into it to review the short selling and the SLBM framework under the cash market, which is there, but it's somehow there are some barriers where it's not really taken off. So therefore, the industry and the SEBI officials and other experts will look into it and suggest measures, and we will move forward.
One thing I've heard, and this is my last part, sorry, you will forgive me for this, but STT on delivery, for example, I've heard it from every day when we speak with, and we don't talk about this every day, but whenever we have these discussions, it always comes up. Why can't the government, if the idea is to curb short-term options in the F&O space and encourage cash, do away with STT on delivery? Is that something you would, SEBI is the expert, and SEBI will of course advise and tell the government, and of course it's for them to decide, but is something that is on the agenda?
No, I'm not going to discuss on TV what inputs we'll give to government and not give to the government.
But cash market development is very much, as you said,
yes.
there's Yes. There's a group which is.
I think whatever needs to be done, we should be doing this.
Fair enough. Now, just on the taxation front, sir, there was a lot of expectation. Maybe also there was some element that markets have not done well, but markets go through cycles. We had a few years of bumper move, and then markets consolidate. But and I think there was that element as well. And many were pointing out that maybe in the budget we will see, FII-related taxation perhaps being equalized to how they are taxed everywhere else in the world. I don't know if you have any thoughts at all, or was this?
I think you're again coming back to the fiscal measures. You should be asking these questions elsewhere.
But was that part of the consultations, pre-budget consultations?
No, I would say that let's look at the kind of measures that we have at a regulator taken for the FPIs.
Right.
For us, to do the market development is to see, the frictions are reduced. There is a greater speed with which they can operate. So there is a registration issue where we have completely now looking at a very different approach to registration. We want it to be digitized. We want it to be fast. We want it to be not days or months, but actually literally a week or 5 days. So can we reduce it to 5 days? So what it takes to reduce it to 5 days. So we're working with custodians, FPIs, other market participants. And then you have now India Market Access Portal for everyone, where all the FAQs, all the different measures. So if you want to enter India, you have one place as FPI, what you need to do, what documents you have.
And I must say, it does not get enough attention. It is not a hot enough topic, but it's a point which many serious foreign investors have raised over the last many years.
And these are the things that we have actually deeply engaged with them. And some of the new registrations have come with India digital signatures of submission of documents, which is an important part of delay. If you have, in this time and age, if you have always a document, physical documents, wet signatures, notarized, apostilled, be submitted on different things, because you have to keep on updating the control and other measures. So whenever there is a change, again, you have to send out the documents. Now, if it could be just instantaneous through digital signatures, it will really remove the friction. It's just something that we really do in our domestic market very, very effectively. We have such a digitized economy, digitized society. So this is one area where we are now pushing forward proactively to see that we move into completely digitized registration.
So from the time that FIIs, when a new foreign investor comes, registers, to the time that they're able to actually invest and start trading, etc., you want to bring that down to a matter of days, basically.
Exactly.
Right.
And we have achieved considerable progress in this.
Okay.
We have a portal-based approach. The new portal, the front end has changed, and we are engaging with them how the India digital it becomes the norm on the same sort of documents which they submit for registration, so with no extra burden.
Well, the Nifty is holding on to that 24,900 mark, but some stocks which are higher today, even the mid-cap index actually is sharply recovered from the day's low. In the morning, the Nifty mid-cap index was down close to about 1.7%. Now it's trimmed its cut to about 0.6%. The small cap index had opened with a cut of more than 2%, nearly a 2.3% decline at open. And now it's down about 0.6%. So the intraday chart of the Nifty and mid-cap will come up for you on your screen. So what's higher? Many of the metal names: Hindustan Copper, Hindustan Zinc, Nalco. These are stocks where there is buying emerging. SAIL is another big mover. Tata Steel is up nearly 0.6%. Vedanta is up about 0.5%, and all these stocks have recovered. In the morning, they opened up lower, 2-3% down, but now buying has emerged in metal names. So it's not just the defense sector, which is the pillar of the market holding up in the green. You've got the metal index also. While defense continues to see buying, we've been talking about it, the Nifty Defense Index is now inching towards a 2% rally. Metals is the one where we have seen a marked change from the intraday lows. On the way down, it continues to be about tourism, banks, realty, many of the IT-related names. PSU banks are selling off. Autos are down 1%. IT is lower in trade. The consumption names are weak in trade, but it's largely metals and the defense stocks which are up.
The good part is that the recovery from the lows today, this morning so far, has given bulls some sort of confidence to go ahead and write some of the puts. So early in the day, and these are options that expire today itself, 24,900 put writers are fairly active, and as are 24,800 put writers. And that is something that we can see in the put call ratio, which, at Friday's close was 0.63, and first hour itself, it's moved higher. That means that there have been some puts which are active right now.
The PCR also, Manglam,
yep, that's 1.03 right now.
From around
0.6.
Okay, one word, Bharti Airtel is another stock which is in the green because they held a call with the investors towards the end of last week. And one key takeaway from there is that that financial commitment for the NBFC in year one will only be 10 to 15% of the committed 20,000. It shouldn't go beyond that, the overall 20,000 that's been committed. And now the new goalpost on ARPUs is 350. Remember earlier it was 300. Now they're talking about 350. Rohit Srivastava, founder India Charts and Strike Money, is now joining us on the show. Rohit, your first thoughts on the price action today. The panic low was 24,650, but we've swiftly recovered. And now even the cut on the mid and small cap index seems more manageable.
Well, I wouldn't jump the gun over there looking at intraday bounces because it's very important to note that at the start of February, when we had the trade deal, we did a massive gap up. And that gap zone is above 25,108. And today we have gap below that. Now, in technical terms, when you have a gap in the same zone and you go back below it, we call that an island reversal, which means that 25,108 now becomes a major resistance, which you most probably are unable to cross. And it would really take some major change for that to happen. And only when you do that would we really say that the worst is behind us. So having said that, I think the break today does get us to the first most important support. 24,600 is essentially the trend line of the last two important bottoms that we've made over the last year. One, of course, occurred, on budget day, and one was sometime last year in August of 2025, when the trade deal had fallen apart. So when you connect those dots, you come to 24,600. Yes, that is an important support, but we can't say that support has held or broken based on an intraday bounce. And like I said, now that we are below 25,108, the bias would be clearly negative.
Okay.
It remains a sell on rise market.
A sell on rise market. Got it, Rohit. And you've been pretty clear that you believe that there's further downside in store. So we've taken that point on board. How low can we go though?
So let's start with what happens if 24,600 breaks. It would open up the possibility of going, down to around 23,500 to 23,300. So that is the risk we are really staring at right now.
And what probability would you assign to that? And now that we're above 24,600, do you think we can go higher from current levels?
No, I wouldn't bet on higher. Like I said, if you're below 25,108, that is more critical than whether you've held 24,600. 24,600, we'll have to give some time to see whether it holds. Okay. I'd probably put a 70% chance on us breaking the lower end based on, whatever is going on. And of course, the setup itself, because on Friday, even before the war came out, we were seeing a lot of selling volume in the market. So there were other reasons why it was really falling.
What will make you negate this particular negative, outlook that you have? At what level? 25,108. That's the first level that we're looking at.
That's the first level where we'll go back and reverse that. Then beyond that, of course, then we go all the way back to 25,600. From where this fall started 2 days ago. So
okay, all right. Rohit, just a quick word on a couple of other assets, gold as well as crude. Do you have a view, and if any levels you're tracking on both these two?
So I know a lot of people start thinking about gold as the hedge in a uncertain situation like this, which is geopolitical. But when we look at the history, sometimes gold does move for a day or two and then sells off. My sense is we may not get really past 5,600, the high that we made in January. However, the real trade during war times is actually in oil. And oil is actually breaking out today. The trend line of all the tops of the last 1 year was at around 70.5 WTI. And we are trading above 70.5. So this is now a signal that if we stay above 70.5, we can even go towards $100 if the situation remains grim or even worsens. And so if there is a trade, a war trade, it is actually in oil and not in gold.
All right. The war trade is in oil and not in gold. Thanks a lot, Rohit, for joining in and giving us your views on the index as well as a couple of sectors. going forward. In these times of uncertainty, you bet the probability on the downside a little more, but on the upside, 25,108 is a level that we should be tracking. But another sector that has been doing well is the defense pack. Hormaz joins in to tell us about those moves. Hormaz.
The only other sector that is doing well other than the metals today, and that is defense. And of course, there's a sentiment positive considering the circumstances that we are in right now. But more than the bigger names, it's the smaller names that are making a lot of noise in today's session, be it the likes of Paras Defense, be it the likes of Idea Forge. Idea Forge, of course, being significantly below its IPO price, still up 9%. Paras Defense is up 13%. And then come the other underperformers. Bharat Dynamics was one of the worst performing stocks in the broader markets in the month of February. That's up 3%. Data Patterns, which did well last week, is extending its gains in Monday's trading session, and Midhani too, one of those defense names that are doing well, gains of around 3 to 4%. Of course, we saw this happen before as well, going back to as early as last year itself when Operation Sindoor was in effect, and all of these defense names had surged anywhere between 20 to 25% during that period, and they had this, and that's because, of course, the fact that the probability of more emphasis on defense equipment, the components used to manufacture them, that goes up, and as a result of which this kind of impact that you're seeing on these defense names. And there are select names that did well in the first 2 months of the year as well. Stocks like MTAR Tech was the best performing defense name in the defense index. The stock was up almost 60%. Bharat Forge has done well this year. The stock is up 30% in the first 2 months of the year. This is, of course, as of Friday's closing. Data Patterns has done well, as has BEL, which is a part of the Nifty now, and Solar Industries seeing double-digit gains. Among the underperformers, though, as I mentioned, Bharat Dynamics, of course, that Cyient DLM is one of the worst performing names on the defense index, along with names like HAL and Masgaon Dock. But if you take a look at stocks that are at 52-week highs, MTAR Tech is, of course, one of those names. Bharat Forge is at a 52-week high, as is Data Patterns, and Cyient DLM on the flip side is trading at 52-week lows. However, we did speak to the management of MTAR Tech earlier in the day, and they mentioned that defense is a very small part of their business. Only 5% of the overall business comes from the defense business, and they are very selective in the contract selection from this segment. So the defense is one name that's bucking the trend this time around, and as long as the conflict persists, they'll continue to remain in focus as well.
Thank you very much for that. The gains in metals and these defense names is trumping the up move that you can see in stocks like ONGC. ONGC has completely flattened out, and crude prices too are now hovering around $77 per barrel. Manisha will join in on the other side and tell us more on what's happening in the world of commodities.
Fly Emirates, fly better.
मेरा रुतबा है मेरा सिग्नेचर, दुनिया की सोच से ऊपर बेबाक है मेरा सिग्नेचर. Signature Finest Silver Elaichi, a premium product from Dilbar Group.
This is Network 18, and you're watching CNBC TV 18.
Welcome back. Let's talk commodities now. Manisha is joining in with her eye on crude prices. Manisha.
Thank you so much for that. And the crude prices should come in on your screen because when we opened the trade today, we were up 13% for the crude oil prices. And we started the day with $82 a barrel. Since then, it is 6% on the higher side. So some bit of a loss is there. Well, remember, market has had 24 hours to digest in what is happening in Iran. And this is a measured stance. When we opened, it was a knee-jerk reaction. There were a lot of trade positions being opened and closed. But at this point in time, it seems kind of settled in the markets therein. This is an 8-month high that the crude prices are trading in at this point in time. And it's not just about crude oil prices, because when you talk about on what's happening in West Asia, it also is about Qatar and various other countries where gas also is a bit of a concern. So you have seen natural gas prices gain up by 10%. The gasoline prices also are up by 4%, trading at an 18-month highs in the Asian markets right now. Well, it's a couple of things that the street will market or monitor. One, of course, is the Strait of Hormuz. Now, shipping companies, while, of course, Iran has said that the Strait of Hormuz is open, but it really is about the insurance companies, which have told the shipping companies that they are looking to increase premium. In some instances, there are reports that the premium has been hiked by as high as 50%. And then apart from that, the insurance companies also have told shipping companies that they are cancelling policies if they take that route. So a lot of shipping companies seem to be rerouting or just waiting on the either side of Strait of Hormuz to cross through. So there is a lot of wait right now and no clarity really. And that is what is keeping the crude prices where they are. The second really is about Iran launching attacks and retaliatory attacks. This is on U.S. assets in various neighboring countries, some 8 to 10 of that. That also is something that the street will continue to keep an eye on. When you look at Strait of Hormuz itself, it is an important area. 20% of the global crude passes through this. Iran exports 3% of global crude as well. So two things that the street will now keep an eye on is on whether or not Iran exports take a hit in any sense. And then it is about Strait of Hormuz, on whether or not we are able to find some clarity, some resolution onto that area as well, on whether or not the ships can pass through. At this point in time, we have most shipping companies suggesting that they will not be taking Strait of Hormuz. If it continues like that, if it gets prolonged, then you are looking at higher crude prices therein. There are major concerns as well in sense of longer shipping routes that many of these vessel companies will have to take, the disrupted and elongated supply chain as well, and then the rise in freight rates, risk of wider inflation are some of the factors that the markets are factoring in. Interestingly, when you look at the history in crude prices, it's not too many days that you see such a hike in case of crude oil prices. A hike as high as 13 to 15% has only happened 5 times till time as the record has been maintained. And today has been one of those days where we saw 13% of a jump up as soon as the markets opened there. Before that, it happened in 2019 that we saw nearly 14% of a gain coming in for the crude oil prices there. Interestingly, well, last 3 years, it was negative crude prices in 2022, 23 and 24 as well, 25 also for that matter. This year till time, we are already up by 23.5% in matter of 2 months, with markets anticipating that this is going to be a bullish year going forward from here. Another reason that you haven't seen crude prices run up is, one, it's the month of Feb and March, which is usually a low demand period. That is what is keeping the prices in check as well. Second, you have OPEC Plus announcing that the production hike of 200,000 barrels per day will happen from 1st of April. So you have crude supplies coming into the market. Also, when you look at the OPEC and allies, it also is about that if the need be, then they will increase exports as well, especially into the Asian markets, to China, etc. And that's yet another thing keeping the prices in check. Well, remember, it's a fluid situation, quite volatile as well, and that is something that could keep the crude prices, the war premium in the prices, much on the higher side.
Thank you very much for that. On the other side is our special segment, Indianomics. Lata speaks to MPC member Saugata Bhattacharya and Citi India Samiran Chakraborty and Nomura Holdings Sonal Verma on the GDP series, the Gulf War and the Indian economy.
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोबूट।
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर। Signature Finest Silver Ilaichi, a premium product from Dilbar Group.
ये हैं कोटक नियो के तेज ट्रेडर। देखिए इनका गजब हौसला।
Nikki index dips and snaps back. मार्केट खुलते ही भयंकर तेजी से गिरने के संकेत, पूरी ताकत से शॉर्ट कीजिए। This stock is on radar. ये ट्रिगर गिरावट का है। स्टॉक में उछाल कसम कैंडलस्टिक्स की। बेचो और बचो।
ये करते हैं शोर को इग्नोर। और ये हौसला जानबाजी से नहीं, जानकारी और तैयारी से मिलता है। Stay तेज with Kotak Neo. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
Hello and welcome to a special Indianomics given the special circumstances. Growth rate and inflation of the Indian economy has gotten a shake-up after the new CPI and GDP series were announced by the Ministry of Statistics. And now, with the war over Iran, which has impacted crude prices and shipping through the Strait of Hormuz, there are more changes expected. The new GDP series has led a few economists to raise India's GDP forecast for FY27 by about 10 basis points. I think Goldman Sachs did that. And it's made many economists lower the CPI forecast for next year again by 10-20 basis points. But the war may put some question marks over both growth and inflation, with crude prices already about 10% higher from last week. So how is the economy poised here on for FY27? I invite my elite panel of economists, Saugata Bhattacharya, an MPC member and economist, a senior fellow at the Centre for Policy Research, New Delhi, Samiran Chakraborty, chief economist at Citi India, and Sonal Verma, chief Asia economist at Nomura Holdings. Gentlemen and Sonal, thank you very much for your time. Samiran, I'll come to the war in just a bit, since we have just begun parsing it. First, the GDP numbers. Some people have chosen to say that because the current year's GDP has been revised up from the earlier 7.4 to 7.6% in the new series, there is a move to revise it higher for FY27. Anything positive, any revisions from you?
Thanks, Lata, for having me. I don't think we have made any big changes to our FY27 forecasts on the GDP based on what we have heard on Friday. But there are two distinct things here. One is about the size of the GDP and how it has changed in the new series. And the other is about the growth rate of the GDP. So what we have witnessed is that the past size of GDP has been revised down by approximately 3%. Yeah. And what we have witnessed also is that the past growth rates have been brought down by, on an average, about 50 basis points. Yes. But more remarkably, the growth rates now appear over the last 4 years to be almost flat. So between kind of 7.1 to 7.6%, rather than the big ups and downs that we had seen in the growth rate in the old series. I think that's a very important point, that we have got a much stable growth path in the past and a much lower size of the GDP than we had estimated before. None of these make us change our growth forecast materially. However, I must say that there is a better growth momentum in the high-frequency data than what the markets would have anticipated even a month back. So to that extent, there is some logic in re-looking at all the growth indicators. But as you mentioned, there's now new headwinds developing, so we have to watch and find out to what extent they act against this momentum.
Fair point. Let me get Sonal Verma's view as well, and then go to Saugato, who's the policymaker in our group. Sonal, there are a couple of things in the new GDP series which look positive. Manufacturing is far, better. It is double digits if you look at the 3 years on average, 24, 25, and 26. Plus, private final consumption expenditure, which appeared to have slowed in the previous year, has now jumped back to 7.1% from, I think, 5.8 previous year. So both consumption from the expenditure side and manufacturing from the supply side seem to be good. Is there a scope that there is at least an upside risk to GDP numbers?
Yeah, Lata, I think there are two different sort of takeaways from the GDP number. One is what it's saying about where we are, and second is where we are coming from. So where we are, the numbers clearly suggest that there is strong momentum in the economy, and the high frequency indicators essentially suggest that this momentum should continue. So for FY27, we are expecting GDP growth at 7.1%. So we do think cyclically things are going to improve. And as you said, manufacturing and certain private services segments growing in double digit was a clear positive. But I think, what the GDP numbers also say about where we are coming from is important. And the 3 to 4 percentage points downward revision in the nominal GDP was led by almost a 10 percentage points downward revision in the size of nominal private consumption expenditure on the demand side, and a 25% downward revision in the trade, hotel, transport, communication segment on the supply side. This is per annum. Now, this tends to be an informal, unorganized sector. What it is telling us is that the post-pandemic, recovery was much softer than one had anticipated. And I think if we map that with the benign core inflation prints we've seen for the last 2 years, I think that now sort of makes sense in hindsight that, the private consumption side was much softer. And I think it implies that the output gap was a bit more negative or at least less positive than estimated earlier. The second important implication is on what this means for the public debt to GDP ratio going forward, because if the size of the normal GDP is lower, then the debt to GDP gets 2 percentage points higher than what was anticipated earlier. So the 56% moves closer to 58% of GDP for FY26, which is the starting point. So if we still need to get to 50% plus minus by FY31, but the starting point is higher, then the speed of consolidation will need to be much faster. So I think that was also an important takeaway.
No, absolutely. In fact, even for the current year, if you have to meet 4.4%, I think, Samiran, you're pointing it out in your note, that you have to cut down expenditure by about 40,000 crore. Actually, I wanted to get some CPI numbers as well, but the policymakers with us. Saugato, in the CPI series, I should have allowed the economists to say that, but the broad view was that the CPI for FY27 has now gotten revised lower by the economists. It's not yet come from the Reserve Bank, obviously. That's because although food looks stronger, the whole weight of food is lower. Core is not as fiery or galloping as much as the old Reserve Bank, old series indicated. So does this make the overall approach to monetary policy somewhat more dovish, because inflation is not going to be the threat it was?
Well, first, thank you for having me on your show. Second, the entirety of the data from the GDP numbers, the CPI numbers that you're talking about, does seem to suggest that what we had understood, what Sonal was saying, that the amount of slack in the economy is probably a little bit more. We were working with a slack of around 5%, 6% compared to the pre-pandemic growth trajectory. Now it seems it's likely to be about 9-10% odd, which is exactly what is also probably showing up in the CPI print numbers. Having said this, I think from the overall tenor of the GDP numbers seems to suggest that the numbers that are captured is better, that potential growth, given the numbers that we have seen for the last 3 years, around 7% odd, 7% plus, and the fact that we are still not seeing any signs of any overheating in the economy, seems to suggest that potential growth is actually up now to 7% odd. So all of this. Having said all of this, I still think that we are in a relatively good position as far as monetary policy goes. It's right, it's appropriate at this point in time, and going forward, I mean, whatever data comes in will guide policy.
Yeah, of course, data can change given the war over the weekend. And I mean, the combined wisdom right now is that it may not be a prolonged one, but I'm not the expert on that. Samiran, let me come to another question which our current viewers will be very interested in. You know, one message from the GDP numbers, revised numbers, is all the past 3 years were very strong. I mean, they were above 7%, which was not our past 20-year run rate of GDP. It was more like 6.5% if you took an average. The past 3 years, it is 7.2, 7.1, 7.6. But we don't see it in the corporate numbers. Corporate numbers for the last 6 quarters, ending September, actually even the one ending December, the Nifty earnings are single digits, often mid-single digits or low single digits. Why this dichotomy? If the growth, as Saugato says, potential growth looks stronger, why are corporate earnings lagging?
So it's a very involved question and probably requires much more research to substantiate what I'm saying here. But there could be 2-3 different reasons for this. One is that we are seeing in some sort of data that the proportion of consumption expenditure that goes towards services, that has been significantly going up compared to goods. And typically the earnings data that you are talking of has some sort of a bias towards goods economy than towards the services economy. The second aspect could be between the large listed players versus the unlisted players. In several sectors, we are seeing that significant unlisted players are gaining market share. And to that extent, that gets captured in the GDP data, but does not get captured in the earnings data could be another reason. And the third is that there is this, in the last at least 1.5 years or so, the rural economy has done better than the urban economy. That's the standard hypothesis. In that sort of a situation also, there is a possibility that the company earnings data does not pick that up very quickly. It's more comes in the GDP data. Although I must say that we were surprised that the entire agricultural GDP growth has been much weaker than in the series than what we had probably thought of. But rural demand is different from agriculture, not just agriculture. So that could be one of the factors. But on a lighter note, I think the point that was really interesting to me was that despite this extremely flat GDP growth for last 4 years, we have seen a 250 basis point hike by RBI and then another 125 basis point cut by RBI also within the same period. This correlated well with the earlier GDP data, but does not correlate that well with the current GDP data.
Oh, excellent point, Samir. I have to remind you of what Y.V. Reddy told us, that central bankers like Saugato are always faced with uncertainty about the future. But in India, they are faced with uncertainty about the past also. So perhaps that's what's hurting. Very quickly, Sonal Verma, before I take my first break, the war. How does that fit in? Do you think, we may be forced to up our inflation numbers and down our growth numbers because of what is a spreading war?
No, I don't think we are at that stage, Lata. I think one is just we need to see the duration of this conflict and what it means for oil prices on a more sustained basis. But second, importantly, oil prices are also regulated at pump level. And therefore, the impact will be seen more in terms of the profit margins of OMCs. And of course, we'll see the impact on the current account, but the inflation pass-through and therefore the growth impact, I think, does not look to be that material at this stage. So it's more of a wait and watch for now.
Okay, fair point. Oil prices regulated in India, and therefore this one-to-one correspondence doesn't work. Though at the moment, even shipping lines are impacted. So perhaps there could be some price rise in other things. Many more questions to my guests. We have to take a break. We'll be back. Bazaar viewers, you will get to watch the whole show after market hours.
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोबूट।
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर। सिग्नेचर फाइनेस्ट सिल्वर इलायची, a premium product from दिलबाग ग्रुप।
ये हैं कोटक नियो के तेज ट्रेडर। देखिए इनका गजब हौसला।
निकी इंडेक्स डिप्स एंड स्नैप्स बैक। मार्केट खुलते ही भयंकर तेजी से गिरने के संकेत, पूरी ताकत से शॉर्ट कीजिए। दिस स्टॉक इज ऑन रेडार। ये ट्रिगर गिरावट का है, स्टॉक में उछाल, कसम कैंडलस्टिक्स की। बेचो और बचो।
ये करते हैं शोर को इग्नोर, और ये हौसला जानबाजी से नहीं, जानकारी और तैयारी से मिलता है। Stay तेज with कोटक नियो। Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
मेरा रुतबा है मेरा सिग्नेचर, दुनिया की सोच से ऊपर, बेबाक है मेरा सिग्नेचर। सिग्नेचर फाइनेस्ट सिल्वर इलायची, a premium product from दिलबाग ग्रुप।
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel, with me is Vinny. And the markets, though under pressure, have recovered a little bit from the lows of the day. The obvious trade was to go ahead and buy the dip. That's played out to some extent, but just keep an eye out because there'll still be some leverage positions that'll be getting knocked out in the next 60 to around 90 minutes or thereabouts. So keep that in mind. Hey, Vinny, what's up?
Hi, Nigel. So yes, we'll keep an eye out on that. What happens in the 60 to 90 minutes next? That'll be key to watch out for. As of now, 24,870 is what the Nifty is at. But let's welcome on board Nalin Kant, who's of Automotive Division of Mahindra Mahindra and Executive Director at Mahindra Electric Automobiles as well, to discuss the auto sales numbers. Hi, good morning. Thank you so much for joining in. You managed to report a good number, inline set of numbers with what the street was expecting as well. While obviously you have the support coming in because of GST, February sales were good. How is the demand trend expected to be?
Firstly, Nigel and Vinny, thank you for having me on the show. Strong month, if you ask me, and 19% growth on the SUV front. Compared to the industry of about 18% SUV growth, I think they've out-tracked. I think the piece which is even more heartening for us is from a Vahan registrations perspective, which tracks end user or end customer demand itself, that grew at about 21.4% year on year. So that gives us strong confidence that the portfolio has strong traction with the market. And of course, beyond the GST, there's a couple of major launches we had done in the previous quarter and in Jan as well. 7XO on the ICE side, and we had 9S on the EV side. Both these products have gotten very strong customer reception, and that's helped us with February bookings as well and billing as well.
Hi, Nalinikant. Good to see you, Ben. Quick word before we get to the demand trends. There was an Indonesian order. I think it had backed 35,000 units of Scorpio pickup, to an Indonesian company. And there were some doubts with regard to that. Any doubts? That order's on, right?
Yeah, we've started shipping vehicles to Indonesia. In fact, the first set of vehicles have already reached, and we continue to deliver on the order that we have. There's no update beyond that at this point in time from our side.
The size of the order as well, we understand it was 35,000 units. It hasn't been scaled down or anything, right?
Yes, that's correct.
Not scaled down.
Like I said, we're delivering to the 35,000 units. Yes, absolutely.
Okay, got it. All right, let's talk about the EV volumes then. I think they were around 4,000 to around 5,000 units, and you were talking about it scaling up. What was it in the past month, and how do you see it pan out, say, in March? Because I think February would be a shortened month, but in March you'll see a bit of an uptick.
Yeah, no, absolutely. And even in Feb, if you look at it, you're right, it was a short month, but from an overall volumes perspective, EVs, we actually delivered north of 6,500 vehicles. So the first time we've actually crossed the 6,000 mark on these vehicles as well. So even in a shorter month, I think it's done well. Look forward to a strong March as well. And of course, 9ers would be a backbone of that. But we continue to see good traction on 9E and BE6 as well. And in the 9E, we've actually introduced a new couple of variants. We announced it yesterday as well. So we're hoping that that starts to give some heft to the overall number. If you see past 1 year, our volume has been in the 4,000 to 5,000 range. Our capacity is 5,000. We are scaling up that capacity to 8,000 by April. So with 9S coming in, we are hoping that that 8,000 capacity will be largely utilized as well.
Okay, so you're expecting 8,000 capacity. We'll start seeing this in Q1 FY27 then, right? The 8,000 you all have spoken about, even for EV units. So then from April onwards, we could see these numbers coming in for 8,000, 9,000 units of EVs, right?
8,000 of capacity, we normally utilize about 80% of capacity. So you should expect us to be around the 7,000 mark in terms of volume, 6,500 to 7,000, which we already started to scale up to, right? Feb is at 6,500. We are hoping we'll inch up from there.
And then when do you expect it to reach 8,000, 9,000 units, right? Because I believe when we had spoken to Mr. Anish Shah, he had spoken about it at one point of time, reaching that 8,000, 9,000. Would it be in FY27 itself?
Yeah, so we have a bunch of launches coming in later part of F27 and early part of F28 on the EV space. So that's probably the right time for scale up. Like I said, our line itself is ready for about 10,000 units, and we operationalize incrementally as new launches come in as well. That's an easier way of doing it. So that's what Anish was probably referring to at that point.
Okay, all right. Final question before we let you go. The feedback you're getting is that the CV cycle is in very, very fine rhythm. What part of the CV cycle are we in? Because a lot of ancillary stocks as well are doing well. A lot of them are talking about they've been totally booked out, and CV is showing traction. So according to you, where are we in that CV boom cycle? Middle, end, start? What do you think?
No, I would say that in the early days, if you ask me, and Nigel, the replacement cycle is definitely well underway at this point in time. But the heartening news is beyond just the replacement cycle, we are also seeing the first-time buyers, what we would call the driver segment. Folks have been driving a CV and eventually wanting to buy their first commercial vehicle. That segment has started to kick in as well. So that's a great sign for us. So it's replacement cycle plus new customers coming into the fold. So I would say it's early days for us in the cycle. Normally, a cycle lasts about 12 to 18 months. So we'll see how it plays out. But we're quite sanguine on this segment right now.
Beautiful.
Just one question I want to know, given the current geopolitical tensions that are going on across the globe, any concerns on export fronts or any blips that one could expect to see then?
Specifically to the Middle East, we have very limited exposure from an exports perspective, volume itself. We are largely in South Africa, Australia, and South Asia markets, so we don't necessarily see a big risk from a volume perspective from that side.
Okay, no, not much of a risk, but in case, there is any stoppage in terms of Red Sea, Strait of Hormuz, as of now it is not. But would that then cause any concern for you all, or nothing on that front affects you all?
Early days to see how that plays out. It can play out in multiple different ways, but we have had challenges in the Red Sea in the past as well. We've had some geopolitical tensions in different ways and forms earlier. So we'll watch it very closely and we'll take decisions as we go through. But at this point in time, very early to say if there's any kind of disruption coming out of it.
Okay. Thank you so much, Nalinikant, for joining us this morning, speaking to us about the numbers. Hope to see you again next month as well, after you report your next numbers. Thank you so much for that. But on that note, we're going to slip into a very short break. We'll be joined by the management of CleanMax Enviro Energy Solutions. Kuldeep Jain will be joining us, and this is after the listing. Stay tuned in for that conversation.
Start with the vision.
Global markets in a bit of a tizzy, and so is the Nifty as well as the Nifty Bank. The good news is both the Nifty and the Nifty Bank have come off a little bit from the lows of the day. And by the end of today, you'll actually not want to revisit those lows that we saw in the first few minutes itself. From the Nifty, the problem is a couple of big names like L&T, they're dragging the index. In fact, L&T is one of the top losers, down close to around 4.5 to around 5%. Giving it company on the downside is Interglobe Aviation, because obviously flights are cancelled, and also you have fuel costs that have spiked up, so and that could hurt them as well. Adani Enterprises, that's the other stock that's part of the losers list. On the flip side, defense is going to be top of mind now, going by the geopolitical tensions, and BEL, one of the top gainers on the Nifty. Hindalco as well is giving it company on the upside. But it's not just BEL that's higher. Defense buzzers in trade today include the likes of Solar Industries. It's been a wealth creator over the last few years, and that one's up close to around 4%. Bharat Dynamics actually off late has been an underperformer, but that's participating today as well. In times of uncertainty, a lot of money moves to gold as well as silver. And from the stock market perspective, you have Hindustan Zinc, that's the lone silver play out there. Muthoot Finance, that's a gold financer as well, so that's a play on gold prices. And MCX, because there is some fundamental news, as well as volumes on gold will move up. In turn, they will earn some more money. So all those three doing well in trade. But otherwise, from the broader markets, there are plenty of stocks that actually started off in the red, and they've seen a big recovery from the lows. Case in point being a Tejas Network. The stock is up close to 50% just in the last 1 month or so. Fino Payments Bank, there's negative news flow, but the stock is still up close to around 8% from the lows of the day. And Sarda Energy as well, we've got the Supreme Court verdict that came in their favor. That one is up close to around 5% from the lows of the day. So plenty of action from the broader markets. By the end of today, the number of stocks advancing. You'd like to see the number around 6 to around 700 odd. Remember, the start of today, it was just around 100 or thereabouts. Vinny, coming back to you.
Thanks so much for that, Nigel. Surely watch out for that advanced decline ratio and where it's going to be headed. But we have the next management on the show today joining us right now. That's CleanMax Enviro Energy Solutions. Saw a bit of a muted listing today, but given the market condition, 9% discount is what it listed at to its issue price. To talk about the outlook of the company going forward, we have Kuldeep Jain, founder and managing director, joining us right now to discuss the business and growth going forward. Kuldeep, good morning. Thank you so much for joining us and congratulations on getting listed. But let's get started with some bit of a numbers, right? Now, finally listed, so you can give us some idea in terms of what we could expect. Let's start with the EBITDA performance, right? For H1 FY26, when you've seen in terms of EBITDA, your EBITDA margins have come in at 68.4% versus a 72% last year for the first half of the year 25. What is the run rate that one could expect from the business in terms of margins, FY26, FY27? Any indication you could give us on that front?
Thank you, guys. And we are delighted to be listed today on the stock exchanges. In our business, we add about, we add about 1,500 megawatt of solar and wind capacity every year and sell the energy so produced to corporate customers, which we are very well on track to do. We don't issue EBITDA guidances, but we've historically been a 58% annual growth rate on EBITDA kind of business. And as of October 25, we had about 6,000 megawatt contracted, but of which only half is built and half more is under construction. So lots of growth still to come.
Okay, hi Kuldeep. Good morning. Good to see you in a bit of a tricky one, right? Not the best day to get listed, but it's been a journey for you
Nigel.
As well as the team in terms of coming so far. Markets today not obliging, but your investors will be interested in creating wealth over the longer term. What's this backstory with regard to this jacket that you're wearing?
Thanks, Nigel. Thank you for asking. I wanted to not stand alone at the NSE platform while doing it. So I got a jacket made with all 600 of CleanMax employees on it. So you can actually see everyone. I wanted to make myself feel and make my team feel that, we are all in it together. So that's the jacket that I'm wearing.
Okay, interesting. Oh.
And I'm still at the National Stock Exchange. So that's the jacket we got made for this. Thank you.
All right, good.
So it's just the individuals of CleanMax.
It's a team effort then, and nice to see you're actually wearing them on this big day. Let's talk about a couple of aspects then. What about business? For the last year, if we look at it, your EBITDA number was ballpark around 1,000 crores. I know you don't give us a guidance, but in the previous 2 years, if I look at it, your EBITDA doubled in 2 years. From around 400 crores, it went to around 1,000 crores.
That's right.
In the next 3 years, there's a probability that this EBITDA number doubles?
Yeah, and absolutely there is, Nigel, because if you look at our business, 3,000 megawatt is built and another 3,000 megawatt is under construction, which will happen in the next 2 years. So therefore, just by those simple metrics, that doubling kind of number makes a lot of sense. And what we see also is that we've had a huge boom in our customer offtake from data and AI as a segment. And data and AI is today already about 43% of our contracted volumes, with all the data centers in India as well as with all the big tech giants. And we, given the global mega trends in data and AI, we see a lot of good prospects for that line as well.
Sure. Kuldeep, a quick one. What's your plan in terms of debt reduction strategy? Some of the amount that you've raised will be paid towards debt. So how much will be left on the books, and cash and cash equivalent also? What are you looking out for, or what can we expect by the end of FY26 here today?
So we are repaying about 1125 crores of debt out of the 1250 crores of primary proceeds, which will lower our debt to EBITDA ratio. But our net debt to EBITDA is already at about 4.6. For the rest of the renewable energy industry, that number is closer to about 5.5 to 6 times. So we are in any case more conservatively geared compared to the rest of renewable energy industry, and we will repay some of that debt.
Okay, all right, Kuldeep. We look forward to having a longer chat with you as well as the team. But congratulations to all of you all. Like the idea with regard to the jacket, but the street will be looking forward to better numbers in the time to come. initially the stock is down, but delivery of those numbers that you're talking about will be top of mind. Well, time to slip into a short break. We have another management waiting for us. KEC is waiting for us on the other side to give us a broad sense in terms of their exposure to the Middle East amidst the conflict.
You want to talk business? Meet me in the On-Board Lounge.
Welcome back. You're watching Chartbusters. You're on CNBC TV 18. As promised, let's get in Mr. Vimal Kejriwal, the MD and CEO at KEC International, that joins us on the show. Hi, Mr. Kejriwal. Good morning.
Hi, Nigel. Good morning.
Thanks a lot for joining in, sir. Before we get to business aspects, just wanted to ask you about your employees that you have in Middle East. Hope all well and everyone is safe.
Absolutely safe. Thank you. All are well.
Well, that's good to hear, because the human aspect first is what we would like to focus on. Let's talk a little bit about business then. I believe 20% of your business has exposure to the Middle East. Could you tell us what are the conversations in the last 40 hours or so with your customers? Is work functioning as normal, or has there been a bit of a standstill, just temporary?
So basically, if you look at our exposure in Middle East, we have around order book of around 10,000 crores, which is roughly 20-25% of our overall order book. And it's 50% of that is in Saudi, and the rest is divided between UAE, Oman, Kuwait, and a little bit of inter-Emirates work. So that's a part of the order book which we have. As far as today the situation is, UAE is completely shut down. It's based on what is happening in the local scenario and the advisory from the local government. We have shut down all work on the projects, and also the factories right now not working. But the rest of the places like Saudi, Oman, etc., the work is going on as usual. So there's no stoppage or nothing else is happening on the rest of the Middle East, if I can say that.
Okay, so Saudi, Oman, where your business continues to be as usual, and the impact that has come in terms of the halt of the factory that you've spoken about, what would that be in Q4 that we could see, sir?
Honestly, too early to say. It depends on when we start. Otherwise, if you look at the revenue, it will be around 50-60 crores per month is the revenue. I think we do around 600 crores and odd from that factory. So 50 crores is a monthly revenue. So depending upon how many days it is shut down and what happens, it's been shut now for, I think, last 2-3 shifts. So as of now, I don't think it's significant. But if the shutdown continues for a long time, then maximum is 50 crores for a month if it's shut down for the entire month.
Okay. So 50 crores if it's shut for the entire month is maybe, if it's shut for the entire month, that you can see.
Yeah.
Okay.
Yeah.
And sir, as of now, no advisory coming in on Saudi Oman front as well, because that is also there in the line of fire. So right now, what is the situation there? You said it's all working, but any advisory or steps that you all have to take?
Right now, no. Actually, on the first day when it happened, we shut down some of our projects on the eastern border of Saudi. Okay. But then there was nothing which was happening. And then we spoke to the client and everything, and they said there's everything normal. So Saudi is completely normal. UAE, obviously, first day the factories and all were working. But then UAE has now issued an advisory of, work from home and other things. So basically, and they said you should avoid being in the public areas, etc. So because of that, and also keeping in mind the safety of the people with, missile parts falling, etc., we decided to, shut down our UAE operations.
Right, sir. Thank you so much, sir, for joining us this morning, just giving us an understanding on what is happening on ground over there as well. And we would request you to join in again with more updates as and when anything comes in. But thank you so much, sir, and hope your team stays safe there as well. Thank you so much for joining in. So that was the management of KEC International giving us an update in terms of what's happening in terms of West Asia and the updates over there. As of now, UAE side, they've shut the operations. Oman, Saudi continues to be there.
That's right. Vinny, in terms of the markets, we are down. But, the news flow that's coming in from the Middle East is not very, very encouraging in the last hour or so. Hopefully, things settle down. But as of now, no signs of any big de-escalation. So I'll be looking forward from a humanitarian aspect that we see some kind of de-escalation in the Middle East. But that's actually absent. For the time being, we leave you with the markets down close to around 300 points on the Nifty Bank down close to around 500 points, and just around 400 stocks that are advancing. Chartbusters wraps up, but Trading Hour comes up next.